The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is Woolworths. Now, Woolworths out with its half-yearly report, and it's cut its interim dividend by almost 20%, citing a challenging half dominated by industrial action and cost of living pressures. Net profit fell close to 21% to $739 million, while group sales rose almost 4% to $35.9 billion. Woolworths says total sales in the first 7 weeks of the second half are up 3.3%, and it's pointing to a more stable trading environment following its recovery from industrial action and ongoing growth in its e-commerce business. So it has declared an interim dividend of 39 cents, as we mentioned, down now 17% from this time last year. And the shares are also off by 4%. My guests here, David Novac from Wealthwise Education and Ashley Glover from CMC Markets. David, Woolworths, last week somebody was telling me there was sort of a pairs trade with Coles and Woolworths. Are you seeing any value in Woolworths now?
No. I personally would have sold it this morning if I had it, when it bounced up very strongly to 32.50 on lower earnings, so I would have sold it then. It's pulled right back. So it's actually had a big trading range of $2.50, so that's very negative technically, that it's pulled back sharply. So there's nothing to me that would have me rush out and buy Woolies, either fundamentally or technically. So to me it would be definitely a sell or a hold. If you bought it ages ago, you might hold for the dividend, but it's not looking great as a growth story, that's for sure.
Okay, technically.
And they've cut the dividend by 17% as well. So.
Yeah, we don't like that. Shareholders don't like that very much at all, particularly if you're holding it, like you said, because you're enjoying the yield. Actually, what are the charts telling us about Woolworths?
Yeah, so I take a sort of a bit different perspective, looking from maybe more of a shorter term analysis as a trader, as opposed to a longer term investor. And if we look at the chart there, we can see, Woolworths has formed a solid base there. So it's a solid level of support. We're back into that level of support at the moment. But interesting for me is the MACD down the bottom of the chart there. We're seeing positive MACD. It's come from a very low base there, and we're now up into the positive territory. And for me as a trader, it's offering quite a decent reward to risk ratio there. If traders were to have their stops below the most recent swing low there, potentially a target of that upward, the downward trend line there. For me as a trader, for a shorter term perspective, I do see some value there in Woolworths. Now the numbers are out and everyone has a chance to digest what's in front of them. We did see an initial knee-jerk reaction upwards. So, as a trader, as a reward to risk ratio trade, I'd look to buy that one.
Got it. That is our stock of the day, being Woolworths.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.